Boy, have we been dying to tell you about this episode. Coming up next, death, benefits, and legacy. It's the Cash Compound Podcast. Ladies and gents, I'm Jay-Do.
I'm Jonah.
And we are bringing you some code cracking cash flow today. We have a theme in the next and last couple of weeks around here as we record this summer of 2024, talking about legacy.
It's a big topic. A lot of people want to talk about it. And legacy actually has lots of different meanings. It doesn't just mean leaving a bunch of money. A lot of people associate that, I think.
I did not. So that's why it's interesting you bring that up. When you talk about a legacy, you know, I've been an MC, an entertainer, and on stage, and legacies always in my world seem to be like
how you
around
a person?
Yeah, like how you retire or something. NBA. You have a legacy. It ain't got nothing to do with leaving money. It has to do with the mark and stamp you put on that product before you retired and moved on.
I'll give you that.
Yeah. Okay.
Totally. I think, well, I guess it's really just the perspective then, because for me, of course, coming out of school, working at a bank, then getting into the insurance space with auto and home insurance, when I was associated with the word legacy, it was always financial.
See, I guess I wasn't in those classes. You know what I'm saying?
It was, right? So for me, when I hear it now, I immediately assume financial, I guess, based on the upbringing. And I've had to learn that, no, it's other things as well. There's other stuff going on where when someone says leave a legacy, you can't just associate it always with the financial. But I guess for you, it was the opposite way.
But today, we are going to associate this. We're going to combine them both, I guess. We're going to focus a little bit more, 60-40, on the money aspect and the financial legacy for your family, friends, church, and charity. I stole that from you. It was something you've always been saying to people as we walk and talk them through what's going on in this save and spend system, but we have to combine it, I think that memory, that teaching, that the notes that we took on your life. We have to connect those things.
I agree. Let's do it.
Okay. Ladies and gentlemen, that takes us directly into our very first piece that we're jumping off into today, and that's going to be our quote of the week. You're not ready to live until you're ready to die. How do you think about that one?
Who said that? Do you know? You're not ready to live until you're ready to... It seems like...
Maximus Aurelius. Meridius.
Okay. I
don't know.
In the Gladiator movie.
I don't know. Wasn't it him? Yeah, maybe.
Maybe. You're not ready to live until you're ready to die.
Now, Jim Rohn said it like this in business. Okay. When we're talking about, I love Jim Rohn. A lot of people have heard me quote him many times. He said, hey, don't start the day till you finish it.
Don't start the day until you finish it.
And how he meant, now, what do you think that means? Because I'm looking at you right now.
Don't start the day.
There's people on the podcast can't see your face right now.
Until you finish it. I got to be honest. I'm not sure what that means.
Got it. Okay. You're not ready to live till you're ready to die. Don't start the day till you finish it. You have to think about begin with the end in mind. Okay. How about if I say that?
I mean, I understand that, sure. But don't start the day until you finish it. I got to start my day in order to
begin with the end in mind, meaning that, okay, the night before you go to bed, you got to write down what tomorrow's supposed to be.
Okay.
Do not get out of the bed and start doing stuff and have the whirlwind of opportunity and the urgent requests from other people until you know.
I can get behind that.
Until you know.
You got to plan. You got to plan. What are you doing? What time are you doing it? How long it should take you? Is it most important? Is it not? Right? A lot of people start their day with doing the hard stuff up front, right? Trying to knock it out.
Well,
I get that.
Most people don't. I think people who are entrepreneurial, people like us, who are type A folks, we have goals. See, you have finished your day in your mind. I
get tired in the afternoon. I got to do the hard stuff quick.
Yeah, see what I'm saying? But I mean, when I was coming up, that's not how I thought about my day. I'd postpone all the hard stuff. And then by the end of the day, I haven't done anything noteworthy.
No, that's tough.
Yeah. And I think a lot of people's lives end up being like that. And we want to have some focused intention. So when we finish this life, we do have this legacy, not just financial, but everything else as well. So let's talk about maybe the numbers. We'll get into that a little bit. Sure. And let's help people understand that here at the Save and Spend System headquarters, the Cash Compound, we're going to walk and talk people through how we can be prepared to die and we can get started today. Begin with the end in mind, of course. 7 habits of highly effective infinite bankers.
There we go. John Maxwell Jones.
No.
Do.
Michael Scott, Wayne Gretzky.
You should know that as we jump into this topic on how to leave a legacy, specifically how to leave a financial legacy, we're going to combine some ideas, but you should know that we have made a feature-length YouTube video on this, how to leave a legacy. That's actually the title of the video. You'll see my face and Jeremiah's face and that thumbnail if you're looking for it on our channel. So just in case you have not seen that, again, that's on our YouTube channel. That channel name is called The Cash Compound. That video is called How to Leave a Legacy. I believe we'll have a link to it maybe in the body of the description of this video, or if not, popping up on the screen right now. But you should totally go watch that. That will help you dive in and help you kind of point if you need it in shorter form than this podcast episode. That'll help you get started there as well. So let's do it. Let's jump in.
When we're talking about the numbers, a lot of times life insurance, one of the main products that we have here as a foundational tool in our wealth building and our money management, we're thinking about the next generation.
Right.
Thinking about the kids. Now, we have kids. I've got 4.
I've got 3.
And we are planning to leave them a couple dollars. There's a lot of different thought processes behind that. Before we get down to the nitty gritty, let's just address the people first off, who I talk to from time to time, got a story for you, who don't have kids.
Yep. That's happened before.
100%. Yeah, we all have. So let's just address that.
Okay.
Is this process, save and spend system, leaving a legacy, is it important if you don't have posterity?
I think so.
Now, why is that?
Well, because you can give the financial legacy, the benefit to family, friends, church, or charity. And I've got a question for all of those who are listening to the episode and this is on their mind. Think about how many people in your life or around you in those categories, family, friends, church, or charity, have passed away. And those organizations or the families or the people that they were connected to did not benefit in that financial space or aspect after that person passed, right? And you've got the ability to change that or change the direction of those businesses, those organizations, those churches, those charities, or the people around you. And it doesn't have to just be the kids, the children.
I 100% agree, but I was on a call not too long ago. I would say this was late 2023. With a lady who her husband was in the medical field. They made lots of good money compared to upper middle class standards, and they didn't have children. So she's trying to walk and talk me through what she wants to do or doesn't want to do. She's trying to understand the numbers.
Yep.
And one of her arguments against, in her mind,
Life insurance and
in her mind was, well, I don't have kids. And I'm saying, well, do you have some other things that are noteworthy that you want to continue?
And probably said no.
It blew my mind.
Yeah, I've had that conversation before.
Yeah, and I was like, whoa, eat or drink today because tomorrow we die. This person, you don't have any, you can give to my church.
Right.
You know what I'm saying? There's nothing that you want.
To me.
Yeah, it is, but there are people that we should address that to.
Yeah.
We don't think that's the way to go about life, that we're just here for ourselves, do the best we can, and nothing. Remember, a legacy is not just them getting financially better. It's actually in insurance terms, Jonah, you got to be, it's being made whole.
It's being made whole.
It's being made whole because you are not able to contribute to their well-being anymore. You're gone. So there's no more money coming in. You used to give to that organization. You're part of it. People and the life of the bodies and the blood, you keep moving and grooving with these organizations or these charities, and they are not able to have you as a part of that. Yeah. And there are many
I've had that
people.
Conversation once or twice.
Yes.
Where people.
There's many people. They got nothing going
will
on.
Argue that, no, there's no one. Period.
I would not give my money to my family, even if they got family.
Yeah.
That's the next step. I was like, whoa. Exactly.
But you should still, so think about it. If that's you and you're listening to this and you're thinking, no, I don't have any family or I don't want to give the money to the family, that's absolutely a thing. I've heard that before. You should start thinking about those churches or those charities or those organizations or those friends that you do want to leave the money to. Now, I'm not saying if you've got a big financial benefit coming your direction after you're gone that you should leave it all to one person. I'm not saying that, but maybe split it up, right?
A lot of people don't realize that too.
Churches in your area.
Yeah, give it to 10 different people. Yeah. Everybody gets 10%, whoever you like.
Right.
Yeah.
But yeah, I have talked to some folks that just don't want to, or they're fighting against it. It's a little crazy to me, honestly.
Yeah.
But
so for those of you who do love your family, Okay, let's talk to you for a second. We are talking about leaving a legacy for our children's children, right? I'm dropping in a lot of nuggets for you Sunday school people in there. There's a lot of things in there about leaving the world a better place than you found it, or that you can contribute to even after you're gone. We think that's very important. Life insurance is the only asset. Here's another quote from our friend Chris Kirkpatrick.
All right, I'm ready.
It's the only asset that it's going to do what it says, when it says, whether you're here or not. I'm paraphrasing.
Okay.
But that's what life insurance does, because life insurance has proceeds. It has a death benefit, meaning that when the insured body, the person that it's on, goes kaput, Nelson Nash would say, graduates.
Yep.
Graduates on to the next life. Hopefully it's a graduation, not a demotion. That is not... Okay, very good.
Yeah.
Graduates on to the next life, that it's going to happen. Okay, so life insurance companies do pay out. We are talking every once in a while to people as well when we give them cash consultations. We're coaches around here to help you with your money management. They also are kind of skeptical whether or not life insurance companies pay out death benefits.
I always tell people, like, Google it. If a spouse was left after the predeceasing spouse has passed, I don't think I said that correctly, but you understand what I'm saying. If one spouse passes away and the other spouse is left, and they had an insurance policy in good standing order, and the life insurance company did not pay, that would be primetime news. You would have seen that, right? You would have seen that.
Ladies and gentlemen,
you've not seen it.
They pay out every single time.
Every single time.
The reasons that a life insurance company may not pay out is because of what's called contestability. There was something about getting that contract in force. Okay, we're using some jargon here, but putting pen to paper that was materially inaccurate. So meaning that...
Or suspicious.
Right. So I told them that I was 35 and I was 40.
And you passed away.
And then I passed away.
1 week after you had the policy.
Okay.
Come on now.
Normal contestability periods are 2 years.
Yep.
So in the event that I had some sort of illness or there was something materially wrong that we potentially overlooked, it could be overlooked or purposefully, insurance companies can contest it. Doesn't mean they ain't paying. Just means that they can contest it.
That's right.
All right, so you got to think about that. Okay, outside of that, unless you're literally Nick Cage stealing the Declaration of Independence and shooting at the president at the same time, they gonna pay.
Yeah.
So don't worry about that. That is not a valid argument.
They'd probably still have to pay. I think they'd still have to pay.
See?
They'd still have to pay that.
Well, if anybody out there is trying to steal the Declaration of Independence, go for it.
Your legacy, as far as how people would remember you, would be tainted.
That's for sure.
Financial legacies come into the family, or the church, or the charity.
Speaking of that, I gotta say that there was a guy. This was a TikTok. I'd be getting lost on TikTok.
Yep.
There was a guy or girl, I'm not sure, and it was just, I'm scrolling through and they're telling a story and they're showing pictures of a cemetery.
That's the wrong scroll. Scroll like
No, scrolling through a carousel of pictures because they're telling a story. And all the pictures are at a cemetery. Said, let me tell you the story about, it was a Reddit thread or something that got put on TikTok.
Okay.
Let me tell you the story about I'm dropping off flowers at the gravesite for my aunt. Something like that. I'm dropping off flowers, and I noticed that there was flowers all around, very close by, from other people, but there was one marker that had no flowers.
Okay.
And I looked at this person's life, and I said, "Oh, that's
Googled them or whatever." Or just read it. Read the tombstone.
I think actually there was 2 markers that were near each other. This is what's crazy.
Oh, and one had all the flowers, and one had nothing.
And this person, crazy enough, their death date was similar, like the same day.
Oh, interesting.
This one had flowers, this one did not, and it was near his family member.
Yep.
So he started to notice something like that. So he started to get flowers for the one who didn't have anything. It's like, this is just interesting.
It's kind.
Okay. What happened? Someone came up and saw him putting flowers on this person and said, "That's weird. why are you putting flowers on this person?
You're not connected to this person.
Something like that.
Yeah,
They realized something was up.
Yep.
And this person who didn't have flowers literally murdered the person.
No, the other person.
And the other person was related. That's why they're saying, why are you putting flowers on this person's grave? They murdered my family member.
Oh, no.
And they were like,
out there.
Correct.
Oh, no.
Because he didn't know. Gets in a conversation with this person. Well, let's talk about it. I'm sorry, this is crazy. Looks up the story on the internet, that type of thing.
Little did you know this was turned into a true crime podcast.
Ends up going to the coffee with this person, talking to him about whatever. They get married.
Really?
Correct.
Whoa.
Legacy, ladies and gentlemen.
Romance. True crime, finance, to legacy, to true crime, to relationship.
Ladies and gentlemen, podcast
It's
over.
a love story.
We out.
I love it.
Okay, so let's talk about doing the save and spend system. As you know, here at the Cash Compound, we teach the infinite banking concept. Infinite banking concept is a term about what you can do, a process with a product of properly structured whole life insurance policies. Nelson Nash discovered and wrote down this information inside his book. Became a bestseller. It's popping off the charts and
a while back you couldn't
shelves
get
right
it
now.
off of Amazon. Do you remember that?
I do.
You remember that? Amazon
people
was
were
sold out, and they were going, or you could get them.
People
off
were
Amazon,
faking,
but it
deep
was like
faking them.
$800.
People were deep
for a
faking
book.
these books or something
For a
like
book.
that.
So if you haven't read the book, it is back on Amazon. It's called Becoming Your Own Banker. We love the 5th edition. It's a black book, and right now they're in stock, so they're $20 on Amazon.
Yeah.
But if they sell out again, it was a little nuts.
So when we talked about doing this for the first time, reading this book, understanding, getting a mentor or coach, that's what we do for people now, about what is this process, I want to do it. We're buying a product that has some guarantees on it that's super old.
Yep.
Of course, life insurance goes back 1,000 years, but like Western American life insurance can be traced about 200 years back. And that always has a death benefit on it.
That's right.
Sometimes that death benefit is misunderstood, and always in properly structured policies for cash use, it's de-emphasized on purpose by pulling some levers so you can leverage cash or the equity and borrow against the policy's value so you can get out of debt or invest or all these alive things, right?
That's right.
You don't do those things when you're dead. So let's talk about this death benefit. We are going to be buying premium dollars by a policy, a pool of money, a contract. That's what we buy. There's going to be death benefit on that.
That's right. I think we'd be remiss if we didn't start, though, with saying there's a really, really popular type of life insurance that everybody in the financial guru space, the financial advisor space, will tell you to go get. And if we want to talk about leaving a legacy and make sure we have it, we've got to talk about the two types because, believe it or not, the type that everyone recommends, which we'll talk about in a second, doesn't actually send them checks that often.
Ooh.
And that's a humongous thing to me.
But it's not because the company
don't pay the checks because we know they pay the checks.
So why don't they get paid out, sir?
Yeah, so
and what type is it?
So what I'm talking about specifically is the distinction between the two types of life insurance. You've got term life insurance and permanent life insurance. Jeremiah, why don't you describe term life insurance to the audience?
Term life insurance has a span of time. The easiest way to think about it is actually you're renting here. There's a lease on it. The term is a time. 5, 10, 15, 20, 25, 30, and maybe even longer. Most of the time it caps out at 30 years. And during that time, your premium dollars buy you on standby a benefit if the insured person dies during the term. So this is basically, we all understand this, but I'm breaking it down for the new members to our channels. This is the kind of insurance you buy just in case you die early.
That's right. So
very important.
So here's why it's so popular. You'll hear financial gurus like the infamous Dave Ramsey who will say buy term and use money that you saved buying term to go invest. That's what he says. He says buy term, invest the difference. But you'll also hear term life insurance packaged as mortgage protection. Any reason why they package term as mortgage protection?
Well, my opinion is that they don't package it often as mortgage protection per se. But the idea behind mortgage protection is in the event that you die early, So early, if someone's dying early, how old are they?
But it's mortgage. They tell you to go get term for the exact same amount of time that you've got the mortgage.
Right. So the idea behind this is if you're dying early, you're probably dying before 70.
Before you pay off the house also.
Before 60, right? That's early. Yeah.
Right.
So you guys get this. So the idea behind this is that you have a surviving family, spouse, kids, you have bills to pay, and you're not there to work.
And you just passed away early.
So maybe we should take care of our family by having a third-party life insurance company have enough money on hand to send a check to get them out of their mortgage misery immediately.
There you go.
Mortgage protection.
Right? So a lot of times term can be packaged as mortgage protection. But here's where it gets really, really interesting. Insurance companies do not make a habit of losing money. And so when you think about term insurance or any insurance for that matter, here's what most people know. They know that I pay a premium. I pay a cost. I have a bill, right? And most people, when they're searching for insurance, they go for the lowest possible bill they can get, right? That's the whole idea around car insurance and switching from Geico to Progressive to State Farm, right? Geico's commercial says in 15 minutes, save 15%. It's about getting the lowest possible bill. That's all they want. And the reason that they go for the lowest possible bill is because it's not a value add to have this insurance. A lot of times it's required in the car insurance space, right? Cars. And so the insurances that aren't required, a lot of times people kind of stay away from them, don't want them, don't get them, that sort of thing. I don't need it, right? Or I don't want it, or I don't understand how it works. But here's where it gets interesting in the term space. People go for the lowest possible bill they can get on the term, and the insurance company gives you or offers you that protection, that term insurance, for whatever term you're looking for, 10, 15, 20, 25, like Jeremiah just said, where they know, statistically speaking, that you will not pass away unless it is an accident or passing away early because of something
unforeseen circumstance.
Unforeseen, right? Yeah. And then here's where it gets really, really interesting. And as soon as you're of age where you might pass away, or statistically speaking, the law of averages says that this person will probably pass away. So think about this, like a 60-year-old who now wants to buy a new 30-year term life insurance policy. Let me have this rented protection for the next 30 years, meaning from age 60 to age 90. The insurance company prices you out of buying the insurance because they know this time, statistically speaking, you're probably going to pass away. And so what that ends up meaning is the term policies that are sold by all of these companies statistically only send checks for the death benefit to the beneficiaries if the insured person has passed away early on accident, right? Unforeseen, and it ends up being 1 to 2% of the time. 1 to 2% of all term policies pay out. And again, like we said earlier, it's not because the insurance company doesn't send checks. It's because they knew you weren't going to pass away unless it was an accident.
And of course, the families that did need it, got it.
The families that needed it, right. That's important.
Okay. So the other type, we'll move on, is permanent insurance. Okay. Permanent insurance probably implies something different than term that we've just discussed. And that says that this policy just might be enforced till you die. It can stay in force. It's meant to be in the game when you die, not if you die early. A lot of times we harp on this. I know I do when I'm talking to people that, hey, if something happens to something's going to happen to you, you going to die.
Right. Isn't it funny if you really think about it? Hey, I want to make sure my family's got money after I'm gone, if that's your goal. Hey, I want to make sure my family doesn't have bills after I'm gone. Hey, I want to make sure my spouse doesn't have to work after I'm gone. Hey, I want to make sure the kids can still go to college after I'm gone. Whatever it is, right? And then you've presented with two products, one that's temporary and one that's permanent, and all the gurus tell you to go for the temporary one. It doesn't make a lot of sense to me.
Not in the financial climate we live in. No, it does not.
Right? And the reason
because of Wall Street,
the temporary one, they're like, oh, well, the temporary one's cheaper. And my 2 cents on that is, of course, it's cheaper. It's the temporary one.
It's the one that doesn't normally pay out. It doesn't need to.
Right.
Okay.
Anyway.
So permanent insurance is an umbrella. And underneath permanent insurance, there are two types of life insurance. There's universal life, which has different products, and there's whole life. This is often confused. Also, in the words of our mentor's mentor, R. Nelson Nash, permanent is a misnomer for universal life insurance.
Right.
Okay, so universal life insurance has a lot of flexibility. There's a flexibility in every piece of it. What you pay, what the value is at any given time, and what the death benefit is going to be. Many of you have seen us with our 3-cup setup, and so in our 3 cups, it's easy to kind of show and kind of manipulate how those things work. Because of that, universal life that came on the scene right about 1980 is not what we prefer, promote, or project to even be in place when you die if you live a long life.
Yeah, unfortunately, even though universal life is categorized in the permanent life insurance section, there is possibilities because of all the flexibility of universal life that when you pass away, there still isn't money to pass on to the family.
Or there's not near as much as you thought,
Right.
because there's been lots of levers pulled over the course of time by you and the insurance company. Okay, the type we like and promote and use for the save and spend system is, of course, whole life insurance. Whole life insurance has a fixed cost, so the premium does not change. In universal life, permanent insurance, universal life, as well as term insurance, the cost changes every year. The cost to insure someone, for the insurance company to keep that third-party risk, goes up every year because we're all getting closer to dying. Whole life insurance does not have that. The cost stays fixed once purchased.
It's big and important because the way that inflation is set up these days, I do not want my insurance inflating over the years. I need the cost to be the same.
Or
important
deflating
Or
the death
deflating,
benefit,
right.
right? The death benefit has to go down because it just doesn't buy as much anymore. Okay, so the next piece would be the permanency. The permanency is the death benefit has been purchased, not rented. So when you die, remember, now it's when you die. I ask people all the time, hey, how long do you think whole life insurance lasts?
Whole life.
But most people say things like, like 31 years or till you're 75 or till you're 100, whatever your life is.
Whole life.
You might last till tomorrow because you might die tomorrow.
Right. It's an interesting concept. Whole
Yeah.
life. Everyone passes away.
So whenever you pass.
It's wild to me that people... Anyway, I digress. Sorry, I was just going back.
Curse of knowledge. Once you know it, Jonah, then you can't unlearn it. But we got to help people and start them from the beginning sometimes. So we want to get into this and help you understand that whole life will pay out. Some people say 100 a lot. Now, why do people say 100? They think they're smart there, and that's a good guess, but why do they say it?
Yeah, I think that originally, back when whole life came onto the scene... A whole life was deemed 100 years.
Well, that's not even when it started. That was like 1956.
Yeah, but I think that's why people say
tables.
that.
Yes,
Yeah.
but that is why they say it. Yes, so life insurance used to time out on the paper at 100 until about 2000 or something like that. So around that time, people would assume that the policy expires at 100.
I don't think it just expires and then it's gone. They would send you the check, literally give you
And that's
money.
what I want to get at. You still get the money. It's just you beat the system. Congratulations for your 100th birthday party. You and Willard Scott. If you old enough to remember him?
Willard Scott. No, I don't remember.
All right, some people out there remember him. Comment below if you remember Willard Scott. Give me a thumbs up somewhere. You get Willard Scott saying happy birthday to you on TV because you turned 100, and you get the money. Okay, they send the check. Nowadays, that table goes beyond that 100 mark to 121. So people live longer. Longevity is a different game now. When life insurance and taxes first came into the game, where people know it in the 20th century, 1930s, 1940s,
People weren't living so long.
they were not living that long. They did not expect you to be collecting that Social Security because if life expectancy is 60 and Social Security is 65, they did not think many people were going to need it. So nowadays, 121. So if you live beyond that time, they send you the check. Ladies and gentlemen, life insurance, according to Chris Kirkpatrick, is still going to be there, doing what you want, when you want, how you want, after you're gone, no matter who's in charge now, because you set it up. So what's going to happen is, at that time, they send you the money. But because you bought that money That's what we want to talk about here.
Because you bought it.
Because you bought it. It's guaranteed to come out one day. We now have a legacy that is going to pay out to the family, and we can manage the cash flow that comes along with it. That's not what this episode is about, but we do have our traditional save and spend system video that you can watch.
That's right.
Do not miss that. If you haven't seen that, 55 minutes will change your life, help you understand how we can cash flow this legacy today and still have the legacy.
So I think we got to give a big shout out to one of our followers who recently watched our save and spend video, like you just mentioned, who recently decided that, you know what, for my life insurance needs, I'm looking for permanent insurance as opposed to term insurance, who recently decided that because I've now bought permanent insurance, I can manage these cash flows as I continue my life and I'm still living and here, and is in the process of getting this policy started, just a few days away from being complete in that process, and gave us a follow on YouTube to learn all the things about cash flowing insurance, the save and spend system. So big shout out to our fan follow of the week, who is
Sandra Alvarez. Let's go. So if you're on YouTube and you're not subscribed yet, that's what you want to be. For comments, for extra mustard from us, when you want to talk, we're going to be right here with you, coaching you through it. And of course, we give shout outs too every once in a while. So Sandra, appreciate you. And she's one of our new coaching clients right here.
Yep.
And remind everybody how much it costs to be coached.
free 99, everybody. $0. You can do that. All you got to do is reach out to us. That's really the objective of a lot of things that we do. We want to educate you. So just in case you don't know or you weren't taught like we were, you can learn as you get older. And once you learn, the most important thing that you can do is take action, right? So listening to this podcast episode, maybe while you're driving down the road, awesome. Maybe binge watching or binge listening to 1, 2, or 3 of them, awesome, right? But if you don't take any action, if today you're sitting there with no financial legacy to leave for your family, you learn that you can leave a financial legacy permanently whenever you go, and then tomorrow you still don't do that, then guess what? Your family or your friends or your favorite charity or your church does not get any better, does not have a better lifestyle after you're gone. They just continue in the path that they've set before them, right? Where you could help out with that just by acting on the information that we're giving you. So if that's you, just reach out to us. We'd be more than happy to help. And we'll help you just like we did Sandra.
Let's go. Okay, so to get into how this legacy works a little bit deeper before we close this particular episode, I want to remind you that when we decided that we were going to buy our life insurance policies for this idea of infinite banking concept and managing the cash flows, borrowing against it and use it for opportunities or debts, whatever you got to get yourself out of, you could spend someone else's money. Remember that the legacy is still there and still attached. There's a couple of features about that. It's guaranteed to come out, which we covered wholeheartedly in this episode. Second, in the type of policies we build, we're expecting and we are guaranteed in the paperwork, most construction, most customization, the policy will be rising in that legacy value.
That's an important piece.
It goes up. So those of you who are out there and you've been on this 30 minutes with us and you've been trying to figure out if you have the right type, you don't, if you're wondering, 9 times out of 10, and the death benefit rises. The legacy is getting bigger, and that's awesome because 100 years ago, life insurance was kind of built not for a legacy, it was built for burial.
Yep.
Burial. So there was not a bunch of extra money. They just made sure that they could close out your affairs, put you in the ground, take care of a funeral. But now there's so much legacy on top of that burial that can happen. So we suggest, you ready for this? I heard it from Garrett Gunderson. A lot of people know him.
Yeah.
That you should buy, with your money now, you should buy your net worth. And you should manage your cash flow after that.
Buy your net worth, manage your cash. That's a little bit easier than start the day finishing it. Or whatever it was.
Buy your net worth. So here we go. We're going to let Jonas chew on that and think about it. Meaning that, remember, you may have debts, you may have expenses that need to be cleared out at the time of death, and life insurance will now cover that in a check, one time, income tax free.
There you go.
But we bought our net worth.
Yep.
You just buy it. So he's like, hey, how do I get my net worth to $1 million?
Buy it.
Buy it. Buy it. And if you buy it with the right type of properly structured whole life insurance, you'll have that money coming to you every single day, more and more. And sometimes we think too far in advance. We think about lifetime. We think about annually, but monthly. We have a great friend in Factum Financial's Kyle Fuller leadership, always trying to help people understand, hey, there's a monthly new amount of money that's ready for you.
That's right.
Monthly, each and every time. So buy your net worth and manage your cash flow. So far in my family, my nuclear household, we have bought millions of dollars that must come to us.
That's right.
There is no question whether or not millionaires come from me. It did not come to us. Now, we have had some deaths in our family. I don't remember getting any checks.
No checks for me.
But our kids are already set up and they will get those checks. We've bought it already. So, hey, are you a millionaire? What's your net worth? I've bought it. It's already millions. I'm cash flowing it and using it now, and it's rising.
There you go. I don't know if it gets any better, but I can tell you this. All next month. Now, this is recorded here in the middle of the summer 2024, but all next month, which is July of 2024, we're actually going live with another YouTube GOAT, I would say, right?
He is.
We're going live every single week with Denzel Rodriguez. He's got a YouTube channel specifically where he talks about cash and all sorts of different avenues. I think one of his favorites is using cash out of a HELOC to do something called velocity banking. And what we're going to do is we're going to combine the shows. We're going to have the Banking Bros, specifically Jeremiah and Denzel Rodriguez, with our cash cultures colliding. That's the name of our live show. It's going to be all July. So if you are a YouTube person, I think we might put it on a few other platforms if we can figure that out.
We'll figure it out.
But if you are a YouTube person and you want to see those two YouTube personalities clash and collide and do a little bit of collaboration, then you've got to join us on YouTube. But I think one of the things that I'd probably wrap up the episode with is another YouTube clip that we have shot, which I think will wrap this episode up, specifically chatting about term life insurance, about whole life insurance, about the differences between the two, and about which one we'd recommend. It's our whole life insurance 60-second investment. Are you ready for it in under 60 seconds? Here's your whole life investment. Whole life insurance has a level premium and death benefit and provides a guaranteed benefit upon the death of the insured, regardless of when they die. Whole life insurance also has a savings component known as the cash value. Those funds are available with a guaranteed return, and at any time you can borrow from or withdraw from the cash value tax-free. This and the fact that whole life covers you until death, as long as you pay your premiums, offer clear advantages over term life insurance, which only pays out if the death occurs within a specific time frame. However, purchasing something guaranteed for life will cost you relatively more than renting that same thing for a term.
We hope you've enjoyed this episode of the Cash Compound Podcast. I'm Jay Dude. This is Jonah. We've been walking and talking through legacy, focusing on the money, but remember, we have information that we want to transfer to our family, friends, church, and charity as well. Information that we love them and we want their message to be continued through our gifts to them. So make sure you teach that to your kids especially. That's why we do so much. And we have our kids in the office and on some of our shorts on all of our platforms. So check us out everywhere you can find the Banking Bros and the Cash Compound. We'll keep up with you in July 2024 with Cash Cultures Collide with Denzel Rodriguez, and we'll catch you guys next time.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
If you enjoyed listening to this episode of the Banking Bros podcast and you need additional resources, what you should do is click the link in the description of this video. What we'd like to do is talk to you specifically and personally about how we can help you accomplish leaving a legacy for your family or accomplish increasing, managing, and keeping those cash flows now while everyone's still alive. We look forward to talking with you soon.